So we got some major updates to cover today. We've got to cover Biden's student loan forgiveness program. The Dr. Fauci is retiring. We got some information here about former President Donald Trump possibly being indicted, and I got some additional information for you guys about Railroad Workers Union potential strike, as well as the housing market and the changes we're seeing in real estate and a potential housing market crash. So we're just going to get right into it. I want to put this up so you can see it. This is a comment that I received on a previous video, and it says, I work in the building industry. As things are going, good luck. Residential building is booked a year out. Now, many are going out of business. Few can even hire labor. Now, apply that to repairs and material shortages. Again, good luck, folks. And this is part of what I was talking about. You look back, I've got previous videos about this. The changes that businesses were seeing, primarily in construction. Sure, there was a boom in demand, limited supply, but also we had supply chain issues and workforce labor issues. And now here we are, kind of right in the middle of it. And this is the turning point where a lot of home builders, a lot of developers are in they're at a crossroads of being able to complete these projects, get the materials they need, and have customers and potential home buyers to buy them off of them, and at or above what they've got into them, so they're not losing money on these left and right. So this is a good luck. I mean, honestly, we are seeing a shift and a change in real estate in the housing market. Below here it says the housing market is crashing and many folks are backing out of contracts, losing their deposit money. It's crashing. I don't, like I said in previous videos, I think the housing market bubble is deflating. I don't think it's crashing just yet. I still think that those folks that are able to sell, probably now between the end of the housing market season, which is, we're approaching the end of it at the end of fall. But those folks are probably still going to be able to see some positive gains, appreciations on their real estate, depending on when they bought it. If they bought it at the height of the real estate in the last, 12 months, then they're upside down, or they will be upside down if they choose to sell, which is another thing. It's like money in real estate isn't made, profited, or lost until you sell, plain and simple. So we're going to see that, but I still think that there's an opportunity there, but it's not going to have people lining up for open houses, beating down your door, all cash or offers over asking, waiving contingencies. Not going to happen. Like, those days are over. Mortgage industry is laying off a lot of people. I have many family members and friends in the mortgage field as processors, funders, and underwriters, and they worked at different companies, and they are all being laid off and have been looking for work, and no one is hiring. One company had over 140 plus underwriters, and they went down to 25 underwriters. My brother survived that cut. Then a couple months later, earlier this summer, they cut that, doing business as branch, and laid everybody or everyone off, including my brother. This is somewhat to be expected as we see real estate changing. As we see real estate changing, buyer confidence, buyer interest, buyer approval rates reducing as the Fed and Jerome Powell continue to raise interest rates to fight inflation. Well, there's going to be a pullback in the mortgage industry. I know people in the mortgage industry that were killing it for years throughout this whole thing, but started with the refis, then it moved on to closing with the rates being super low, and everybody wanted to get in on that action. And now, there's a cycle. And hopefully for those folks who were in the mortgage industry while everything was good. Hopefully they put that money away and they saved it, and then they reinvested it in other opportunities that are going to pay them dividends now that they're going to see a decline. Like, it can't be up all the time. And then we received a update here, or a comment from a railroad worker. Sorry guys, I'm trying to drink my coffee before it goes cold. But it says, work for Class 1 railroad company. We are shorthanded and expected to do more. When they report record earnings year after year and fight is tooth and nail, wonder why morale is at an all-time low. And this is something that we've covered before. This is something that we're going to continue to monitor and see where this goes. I think we have until October 18th is the end of the 30-day cooling off period for the negotiations that were put forth that didn't really give the railroad workers what they were after, didn't really give the railroad companies what they wanted. So nobody's really happy there. So got to wait and see how that goes. But, this is frontline, boots on the ground, real world intel from a Class 1 railroad worker stating that they're shorthanded, yet being expected to do more while the companies report record profits. And I think we're going to see more and more of this as the economy continues to kind of sink. Inflation continues to go up, costs continue to go up, raw material costs continue to climb, inflation, we haven't seen it pull back yet, but as it occurs, people are going to lose their jobs. And as people lose their jobs, the companies are going to look at the folks that still have jobs and say, if you want to keep these jobs, you're going to do more work than you've ever done before, or you're going to lose your job too. And that's where we are right now. But I want to talk more about this housing market. And this one here, and one of the key things I want to point out is I'm pointing in the wrong direction. Let's see if I can get this right. If you see this comment here with a phone number or WhatsApp or any ridiculous generic reply, that's not me. It's a scam. Don't fall for it. Don't call it. Don't do it. I have asked in a comment for people to email me, but I provide my email for you to email me, which is the same email that's in my channel banner. It's the same email that's in my description. So this one right here is fake. Like, don't even, and I can't even get rid of it. Like, I do it and it just comes back. I try to filter through it, but they just keep coming back. So that's a problem for YouTube to try to handle. But either way, I want to read this comment here. It says, no job wasn't safe in the long run. I've been in banking for years. I'm a mortgage loan processor. I was laid off Friday before Memorial Day and seldom, if ever, see mortgage jobs hiring. Still looking for a job 3 months later. Saw it coming for a year. We just kept getting slower and slower. And that makes sense. Why did it get slower and slower? It got slower and slower because the buyer's confidence was being reduced. So you got to think about it. Buyer's confidence was being reduced. Seller's confidence was being reduced too. Because as a seller, you need to move on to the next step, next phase, whether it's buying another property or building a new home. So with the seller's confidence being reduced and buyer's confidence being reduced for the fact that, one, they don't know if they're going to keep their job. Two, interest rates keep going up, which that affects the sellers too. If the seller has a home and they're locked into a low interest rate and they feel pretty comfortable, yeah, sure, there's an opportunity to profit on the sale of the property. But if you're in fear of losing your job or the interest rates going up, then that's going to reduce your confidence and cause you to pull back. Because imagine if you sold your home and then now you're in between selling and buying, and for some reason you lose your job, interest rates go up, and now you're not approved for the next purchase. Well, ultimately you've just put yourself in a situation where you're going to be homeless, and now you're going to have to find somewhere to rent or some other alternative option because now you're not going to qualify. So all these factors come into play, which ultimately like further compound the problems with the housing market. And as they saw for years, we just kept getting slower and slower. I mean, I think that's kind of relative. I think that this may be dependent upon the mortgage company or the bank that you work for, because during the height of the pandemic, like there's no way you were getting slower and slower. But as we were coming out of that tail end, as we saw that last stimulus check that Mitch McConnell keeps talking about, claiming that everybody's flush with cash from stimulus checks, then we started seeing some differences in the market slightly. And that's probably when I would start to say that we start to see it slow down. As the Fed starts raising interest rates, then we start to see it slow down. We saw it pick up when they lowered interest rates. It only makes sense. Every action has an equal and opposite reaction. But now here we are, slowing down almost to a standstill, probably, depending on the market, depending on the market. And what we're seeing here is that those in that industry, once they're out, once they're laid off, once they're fired, once they're terminated, once they're let go, there isn't a huge opportunity for you. There isn't. And, if you're in the mortgage processing, mortgage underwriting, that's one thing. Opportunity is going to be limited. If you were in banking in general, probably even more so, for the simple fact that we know that the banks are reducing the physical footprint of people and introducing more and more technology into the banks, and and adopting AI and other automated processes, so that they don't need so many people. They don't need the overhead. They don't need the HR. They don't need the benefits. They don't need any of that stuff. So this is going to be a really important time. And for the folks that I'm talking to, if you're listening, you're probably in a good financial situation. You probably made a lot of money. You probably got good credit. You probably got you have a great resume. You got some good contacts. But now is going to be an important time to prepare yourself for SHTF in your industry, in your market, in your world, because you're going to have, think about it. If you're in banking, if you're in mortgage, and you were pulling in $200,000 a year, and now you lost your job, you're going to be hungry, okay? And you know that you don't necessarily need $200,000 a year, but you got a boatload of competition out there fighting for the one opportunity that may exist. So if you made 200 and 100 other people made $200,000 a year alongside of you, but you can live off of 125, who's going to take that job for less? Who's going to take that opportunity for less? So it's going to become a little bit cutthroat depending on who you are and where you are in your region. But it says that unfortunately, many in the mortgage industry are in this situation. I have many family and friends that were processors, funders, and underwriters, and they were all laid off this year, and basically no one is hiring. Lenders are literally shutting down and laying everyone off. It was getting slower, but everyone was hoping for things to pick up, but things never did. And I keep hearing of other lenders laying off large amounts of people to this day. So this isn't just smaller retailers or grocery stores or truck drivers or folks earning minimum wage and things like that laying off. We're seeing layoffs across the board, and we see tons of layoffs in the tech industry. You know, and we saw layoffs earlier with Zillow in the housing market and real estate, as they got in a little bit above their head with their buying program of just buying up houses left and right, trying to corner the market. The car dealerships did it. The car dealerships did it by buying up used vehicles for more than what people paid for them brand new with 30, 40,000 miles on them. And then they cornered the market by having all that inventory and then jacking the price up. I think Zillow tried to probably do something similar, but it didn't quite work out for them. I think they overpaid, and they didn't have enough inventory to really command the premiums that they would want. In addition to the fact that people aren't as qualified as they once were as interest rates go up and their income goes down, whether it be they lost money or they lost their job, or the fact that everything remained the same, but inflation makes their money not go as far. So it reduces their ability to be approved for higher loan amounts. So that was kind of a little bit of a backfire. But like I said, this is all kind of like dependent upon your region. I actually have plans to bring you guys a interview with an agent in South Florida who has real world experience about the housing market, not just in South Florida, not just in his area, which is Boynton Beach, but nationwide. So we can get a better understanding and a grasp on what's to be expected and what's coming. I'm gonna link him in the description. His channel name is Living in South Florida, Chris Igo, and he's a real cool guy, and he's got a lot of great information. And I'm gonna work on putting together something for you, so you have an idea and understanding if you are a potential seller, if you are a potential buyer, because the housing market is still going to exist, transactions are still going to occur. Now's the time to be as smart and as savvy as possible on both sides, buying and selling. And I know a lot of people are looking to relocate. And so if you're looking to relocate to Florida, there's probably a few things that you're going to want to know that you probably weren't aware of if you haven't lived in Florida or a coastal state, a state prone to hurricanes and flooding and things like that. So we're going to bring that to you guys really, really soon. But at the end of the day, whoever you are, whatever situation you were in, whatever your employment situation is now, you need to be preparing for what could possibly be coming, more than likely coming in a very short period of time. And that, to me, I'm just sharing what I'm doing. It's not financial advice or anything like that. But what I'm doing is I'm adjusting my budget, trying to minimize my expenses, capitalize on my savings, double down on my investments, bring in additional income, produce passive income streams, and prepare myself and my family for SHTF, so that SHTF being whether it be food insecurities, whether it be higher inflation, whether it be increases in rent prices and in insurance prices until we buy a house, buy a condo, whatever it may be. I'm trying to align myself and position myself to be in the best position possible so we don't get wiped out. But at the same time, when the opportunities present themselves, we are prepared and ready to capitalize on them.